Welcome back guys, my name is Angelo. Lately it feels like the most popular finance channels on YouTube are constantly talking about passive income. My 6 best passive income ideas for $100 a day. Passive income, how to invest $100 in 2023. 9 passive income ideas, how I make 27k per week. And the 4th is especially creative and definitely didn't get its inspiration from the previous one. 7 passive income ideas, how I make 67k per week. Well, today I want to take a look at what these 4 popular YouTubers recommend you can do to generate passive income. After all, I think we can all agree that earning money without doing anything sounds pretty sweet, right? So let's find out if passive income actually exists or not. And if it does, you may be surprised to hear that your options to generate extra income without working are a lot more limited than finance YouTubers would lead you to believe. Okay, let's not waste any more time and start with the worst one of the 4 videos I mentioned. 7 passive income ideas, how I make 67k per week by Mark Tilbury. One of his recommendations is working on a side hustle to generate income later on. That's not passive, and the reality is your earnings start to dry up once you stop working on your side hustles usually. Then, making online content. Once again, requiring lots of work and dedication, and you finding ways to monetize whatever you're creating. Private investing. In my opinion, this is by far the worst advice he could have given 1.5 million strangers on YouTube without going into a lot more detail first. Basically, he's telling people to invest their money in someone else's project, sometimes even a friend or family member, as a way to make passive income further down the line. As it turns out, you're actually a lot more likely to lose all of your money since the vast majority of startups fail. Next, affiliate marketing, which is far from passive as it requires you to produce a lot of content and a large community of followers first, which you then need to maintain so it doesn't fizzle out. Creating a digital tool. Again, this will be tons of work, you needing to know how to code or pay someone, and to find an opportunity where people will be willing to pay for your digital service. You of course also need to maintain it and to add more features on a regular basis, as competition will most likely be showing up quickly if you end up being successful. Does that sound very passive to you? Renting out your stuff like a room in your house or apartment. Okay, this one definitely requires less work up front if you have the space for it, but it's still more of a mini job than a passive investment, since you'll need to deal with tenants and their needs, clean up regularly or hire someone to do so, etc. The only idea he mentions that I would actually consider really passive is his first one, investing into dividend-paying stocks. But more on that later. Now, there's one part that I really didn't like. At one point he mentioned that Hostinger, a web hosting provider which by the way paid to be included in his video, something he did not disclose anywhere, cuts your time needed to make passive income via your website short. According to him, it's the best tool he has found for this side hustle and he has been using them for a while himself, and yet, when looking at his website you can easily find out that he's actually using the Google Cloud via SiteGround, so that was clearly not true. That would be like me lying to your face saying that the best tool that I found to buy stocks and ETFs that I've kept a secret from all of you guys so far is some shady random broker just because they paid me to appear in a video, while in reality I'm using Interactive Brokers for my personal investments, which is actually one of the best low-cost brokers in Europe. Anyway, sorry for drifting off topic. I just found it disappointing to see someone lie just to earn as much money as possible from a video, especially when their whole persona is being a rich millionaire already. Then again, I haven't watched any other videos of his, so hopefully I'm wrong. Speaking of milking your audience, if you're enjoying the video so far, don't forget to gently tap that like button and to subscribe if you haven't yet. And if you'd like to support me, you can find my links to the best low-cost brokers for stocks and ETFs in the description below. Next up is Ali Abdaal, who usually gives solid productivity advice and doesn't make videos about personal finance too often. But since his video 9 passive income ideas, how I make 27k per week is the most watched passive income video ever on YouTube and the most popular video on his channel, we're still going to review what he's saying. To cut things short, the only option I agree with as a viable way to actually generate passive income in his video is investing in stocks and shares. All the other avenues he talks about, starting a YouTube channel, starting a podcast, affiliate marketing, creating and selling digital products or services, creating and automating a business, or a paid membership community, all require you to put in countless hours of unpaid work first in order to hopefully build a large community of people that are interested in whatever you're sharing or selling. And while that may generate recurring income after some point, once you step away from your venture for a prolonged period of time, earnings usually start to dry up. So while it was an interesting video to watch, especially if you're a creator thinking about starting an online business, 8 out of the 9 passive income ideas he mentioned were once again far from passive in my opinion. Okay, let's move on to the popular personal finance YouTuber Andrej Jik next and look at his 6 best passive income ideas for $100 a day. Creating an online business, which is certainly not passive. It's not like you start a business and you suddenly start making money without working on it constantly. The same goes for royalties on content you produced. After all, for this you need to put put in a lot of work up front in the hopes that you created something that people are willing to pay for. Then real estate, which I wouldn't consider truly passive either, as it requires a lot of capital up front and you taking on a lot more risk using leverage via a bank loan, but we'll get to that later. REITs, so real estate investment trusts, these are usually publicly listed companies you can invest in, providing a way for individual investors to earn regular income from real estate without needing to buy and manage the properties yourself. This could indeed be an interesting option. I'll get to some ways to do this as a European investor later in the video. He also mentions cash deposits, money market funds and bonds, all three of which can indeed generate passive income. Just keep in mind that these won't help you beat inflation long term, in case that's your goal. Andre is the only one who also lists peer-to-peer lending as a riskier option at the start, but since interest rates on P2P loans in the US are quite a bit lower than what you can get in the sector in Europe, they're most likely not worth the risk for US investors. And lastly, dividend stocks, another solid option. I like that he mentions that the dividends are not 100% guaranteed, they can go up or down, and that he's honest about the fact that his returns so far from dividend stocks have been lower than simply investing in a passive low-cost index. I consider him one of the better finance influencers, and in my opinion, his video contained a lot more useful information compared to 99% of the other passive income clickbait videos on YouTube. Last but not least, let's see what Graham Stephan, who was actually one of my role models when I started this channel 4.5 years ago, had to say in his latest video on the topic titled Passive Income, How to Invest $100 in 2023. He clearly mentions that there are two ways to generate passive income. You either invest your money or you invest your time by starting a business, for example. But let's be honest, when someone invests their time to make money, that's just called working, not earning passive income. So the only two options that are really passive from his video are once again dividend paying stocks as well as index funds. I like that he mentions that not all dividend stocks are worth buying, even if they're paying you a high dividend yield, if their stock price performance ends up being below the market average. After all, dividends are not the only thing that matters. You need to look at your total returns, so dividends and capital gains from your investments. After watching these 4 videos, I have to say that Andre and Graham's videos were the most useful and true to their title. Meanwhile, instead of putting passive income in the title, Mark Tilbury and Ali Abdaal should have probably titled their videos Second Job Ideas, how I make X number of dollars per week from my work instead. But that would have generated a lot fewer clicks. So let's recap. Here are the only few worthwhile options that are actually passive, my take on them, and how I would implement them myself as a European investor, since I myself am based in Austria. Yes, the country with the Alps and the cows. Just please keep in mind that none of this is investment advice, I'm just sharing my personal opinion based on my own experience as an investor. Let's begin with what I would consider the most passive out of all the options today, dividend paying stocks. But since selecting the right stocks manually and monitoring them on a regular basis is far from passive and is statistically less likely to lead to optimal results, you should probably select an ETF instead. There's just one thing I would keep in mind. The dividend yield shouldn't be the only thing you focus on if your goal is to build wealth long term, not just cash flow in the short run. For example, the distributing version of my favorite ETF, the Vanguard FTSE All-World, which holds over 3,600 stocks from all over the world, including emerging markets, has a dividend yield of only 1.9 to 2% per year. But looking at its yearly returns or its total return of over 50% over the past 5 years, it should be pretty clear that dividends are only part of the investment returns you can achieve from stocks, or in this case ETFs. When looking at ETFs targeted towards income investors, you should therefore always look at their total performance, so dividends and capital gains combined. You can do that very easily on just ETF. Let's compare a few of the most popular global high-yield ETFs with the Vanguard FTSE All-World to show you what I mean. These 3 each have several billion euros in assets under management because they pay out more in dividends. For example, the Stoxx Global Select Dividend 100 currently has a dividend yield of 6%. Sounds pretty good, right? Well, what's the point when it ends up with less than half the performance over the last 10 years, including dividends by the way, compared to a simple low-cost FTSE All-World ETF? It's a similar story with the SPDR S&P 500 Global Dividend Aristocrats and the Vanguard FTSE All-World High Dividend Yield ETF. Right now, there's only one well-diversified global dividend-focused ETF I would consider, the Fidelity Global Quality Income, with a dividend yield of 2.86% per year. It even managed to outperform the Vanguard FTSE All-World over the past 6 years. You can find its ticker symbol as well as the best low-cost broker in Europe to buy it in the description below. Speaking of dividend-paying stocks, this brings me to option number 2. REITs, which is short for real estate investment trusts. These are usually publicly listed companies you can invest in, enabling you to earn income from real estate without needing to buy and manage the properties yourself. Purchasing an apartment or house using leverage via a bank loan, dealing with all the responsibilities that come with home ownership, and then renting it out in the hopes of generating positive cash flow after all expenses, including loan repayments and interest is not a passive investment in my opinion. It's more of a side hustle, which obviously gets easier the more rental units and experience you have, and if you happen to get lucky with your tenants. But it will still take up some of your time on a regular basis. Meanwhile, investing into REITs could indeed be an interesting option if you're an income-focused investor, as it's a way to invest into real estate that's actually entirely passive. Once again, I would pick a well-diversified ETF that's investing into a large number of REITs and real estate companies from all over the world instead of trying to pick single stocks. In my opinion, the 3 best ETFs for this purpose are the iShares Developed Markets Property Yield, the HSBC FTSE EPRA Nareit Developed, and the VanEck Global Real Estate. They currently have dividend yields ranging between 2.5 to 4% per year. If we do a backtest on Curvo, we can see that the VanEck Global Real Estate ETF performed the best since 2011, but the other 2 are not far behind. Here we can also see that just as the global real estate sector recovered from COVID, the current high interest rate environment by central banks pushed prices back down. On the other hand, this could represent a good buying opportunity if you believe central banks are going to lower interest rates over the coming months and years as they hopefully get inflation under control. Once again, I added each ETF's ticker symbol to the description so you can find it. This brings me to the third option that's able to really generate passive income, peer-to-peer lending. With interest rates ranging from 10 to 15% per year on the most popular European platforms, it can generate a lot of cash flow quickly. That being said, it's not risk-free either. Don't let anyone tell you otherwise, which is why I limit P2P to 10 to 15% of my investment portfolio, less than 1/5 of what I have in passive ETFs for comparison. Also, proper diversification over platforms and lending companies is key. The saying "never put all your eggs in one basket" is true for this sector as well. You can watch this recent video of mine to find out more about how peer-to-peer lending works, the risks associated with it, and my favorite platforms right now. So, you might have noticed that all the truly passive options to generate income might not require much of your time, unlike all the side hustles in the clickbaity passive income videos you see online, but they do require your capital. The good news is, while it'll probably start small, for example 3% dividends per year on an investment of 10,000 euros are only 300 euros per year or 25 euros per month, you'll be able to increase the income you receive from these over time by saving and investing part of your salary from your existing job and reinvesting dividends you receive in case you're not planning on spending them. And if you choose well-diversified ETFs, chances are you'll end up with much better total returns long term than just the 3% in dividend yield. Personally, I'm expecting an average of about 7% per year long term for my investments in ETFs, with lots of ups and downs in between. But wait, there are 2 more options I didn't mention in the previous section, since they're highly unlikely to beat inflation over a prolonged period of time, and since they might only be interesting over the next year or so after the recent rise in interest rates. The first one is a simple cash deposit secured by a bank deposit guarantee of 100,000 euros. Like the 2% interest per year I've been getting on my cash reserves using the broker Trade Republic since January, paid out at the start of each month. If you dig around, you might be able to get maybe 0.5% more in interest somewhere else. But don't forget that being able to invest the money right away, for example if the stock market suddenly drops by a few percent, might be worth giving up on a slightly higher interest rate on your cash when you consider the opportunity cost of you needing to transfer money to a broker beforehand. At least that's how I feel about it. And lastly, bonds can be another effective tool to earn interest on your money with very low risk, as long as you stick to the best rated euro-denominated government bonds and short durations of less than 1 year. That way, you limit the risk of your bond ETF crashing 19% in value due to rising interest rates, which is exactly what happened last year to the largest euro government bond with more than 4 billion euros in assets under management, the iShares Core Euro Government Bond. I have to say, bonds are something that's very difficult to successfully cover via ETFs, and I have to admit I have zero experience with them since we've had negative interest rates in Europe for so long. It's something I'm planning to look into more though, so stay tuned for more videos on the topic. Now, there's still one ETF option you could look into if you wanted. I'm talking about the Xtrackers Euro Overnight Return ETF, which aims to track the performance of a deposit earning interest at the current euro short-term rate, which is sitting at 3.65% per year right now. While it helps you eliminate the duration risk you have with bond ETFs, it does expose you to some counterparty risk, due to it being a synthetic swap-based ETF, so just keep that in mind. You can find it using the ticker symbol XEON on Interactive Brokers and Trade Republic. Alright, there you have it. Now I want to hear from you guys though. What's your take on all the passive income advice you see online? Do you agree or disagree with what I shared in the video? Leave a comment below. Also, don't forget to gently tap that like button if you enjoyed the video and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to the best low-cost brokers in Europe for stocks and ETFs. Thank you guys so much for watching, have a wonderful week, and until next time.